Hey all, welcome back to my channel. I'm going to make a few changes to my channel. Biggest one is going to be my schedule. Initially I was uploading like 2 or 3 times a week. With my new strategy, I'm finding that probably 1 video a week is probably going to be good. And I'm going to go over the strategy I'm going to be working on is going to be, it involves selling put options rather than day trading. And the plan is to give like weekly trades that I would make. I won't always have the capital for it because the trades I recommend are usually going to be about a month out. My next expiration is on the 25th of this month. So once these expire, then I will collect the premium on them, and that's basically how we'll make our money. And then I'll go over actual trades that I'll be doing rather than just recommendations. But for now, the first stock I would recommend, I'm going to give like 3 different stocks that I would recommend. First stock I would recommend is Tesla. So the way this strategy works is you want to wait for the stock to fall, and then this is on a weekly chart. If it's taken a dive over the last week, looks like it's down almost 9%, which is perfect. You want to be between 5 and 10% for the week, but have a stock that is actually trending upward if you look at the bigger picture. So this one's perfect. So if you look at a weekly, you can see, and just today it gapped down. If you look at the advanced chart, let me go my candlesticks here. And then let me go to the week. You can see it gap down here today when it opened. So that kind of consolidated. Now it's heading back up, this is like a perfect setup for my strategy here. So what we do once you have that setup, come into your options. Instead of buying a call or a put, we're actually going to sell a put. This does require quite a bit of collateral because you're going to be buying 100 shares at the strike price. So whatever strike price that you pick is going to be how much the option cost to open, and then you'll be collecting the premium for that. In this case, since this setup is almost perfect, I would pick one of these that are in the are considered in the money for the person buying the puts. So this 290, we have the share price is currently sitting at 295. So you can go above that 1 or 2. Select one of those. Typically, if it's not a perfect setup, but you can definitely tell the stock is trending upward and it's probably going to continue to go upward, I actually go down to where I hit this 70% chance of profit, and I select that one. So if we do that one here, you can do this one as well and probably make some decent money. But if you select this one here, it's at 70% chance of profit. You can see you have to put up $28,000 of collateral. If the stock goes down to 282 or expires at 282 or below, you'll end up losing money. But the chances of it going down over the next month down to that is pretty rare. That's why you have that high percentage chance of profit. But in this case, so you can see the 455 is going to be the expected profit and loss at expiration. And I'm sorry, this is actually a 4-day. I usually go out a month, so either this 25-day or this 32-day is actually the one I would do. I was looking at that profit and it looked a little low. Here's one at 70%. If we click on this one, here we go. This looks more like it. So if the price ends up going down below 284 and expires at that, you'll end up having to sell the stock at that price, or I'm sorry, at the 284 price, and they'll make the difference in the price there. So this requires, let me see here, I'm selling the put. my collateral max loss. That looks a little funky. Sell a put. I'll make sure I'm looking at this right. 70%. Oh, so I got the other one on there. Let me get out of here. All right. There we go. This makes a lot more sense. Okay, so here we go. We got the 26,000 in collateral. Again, you're only using that max losses if the Tesla stock goes down to 0. So the chances of that happening are pretty much nothing. The stock price going down to 262 is where your break even is at. What you'll end up doing is buying the stock at 260. You'll be getting the stock at $262. So if the stock is 251, then you're actually buying it from somebody at 262, even though the stock price is currently 250. So that's how they make their money on their end. But if it expires, you end up getting this profit here, this $1,200. And then if you don't, and it ends up going under this break-even price, you'll get 100 shares of this stock at this break-even price at 262. So you can hold on to it, or you can sell covered calls. I haven't done that strategy yet, but from this wheel strategy that everyone preaches online, that's what people do. I haven't been assigned any stocks that I would want to do that on yet, but that's the strategy basically. If it does end up taking a dive and you get assigned the stocks, you get 100 stocks of Tesla, you would just sell covered calls that are way out of the money and collect the premium on that until that goes through. So for now, Tesla is going to be a good one. Again, I would go 32 days out. You're looking at $1,200 profit. That's $1,200 in a month. So once you get some more capital, getting 2,000 or 400 would be even better, and then so on and so on. So basically just do this every month. That's my plan to make money here. And like I said earlier, this is a perfect setup. So if you go up to one of these other ones, we have this $300 strike price, which is out of the money currently. Let's close this one out. We'll add this one here. You can see the profit. You would still make profit on this if it expired today, $1,893. If it does go up to that $300 strike price, then you're looking at a profit of $2,300, and you're basically just collecting the premium. You get your $27,000 back, and then you also get your $2,380 as well on top of that. So you're basically just you're selling that put, collecting the premium on it if it doesn't go down. And then, like I said, if it does go down, you end up buying the stock at that break-even price, which is a huge discount right now. If you can buy Tesla at $276, that's a huge discount. So highly recommend it. It does take a little bit longer, of course, to collect your money, but you also don't have to do day trading, which you have to sit and look at all day long. So that's my first stock, Tesla. If we go back out here and go to my investing, income ETFs. Another one I'm looking at is Tempus. So Tempus has been kind of taking a dive recently, over the last week. Even over the last month there, but you can tell that it's kind of trending upward. Total, this stock is going to be strong for a while, so this may be a good one to get into as well. This is going to be it's an AI stock, but it's dabbling in the medical industry. And this is one that Nancy Pelosi owns or just bought a bunch of, so I think this one's going to stick around for a while. Let's go into our options and see how it is. We'll go to sell puts. Remember, we're going to be going 1 month out. This one I would probably go to that 70%, just because this may not be the bottom. So I'm going to go down to this $52 strike price. Again, that's not the break-even price. So if it goes below $52, you're still in the money. You're still going to be making money until it breaks this $49.10. And then you got to sell that. You got to sell the 100 stocks at that $49.10 price, even if the stock is cheaper. So that's how people make money on the other end. But let's go to this. We'll add that. And all right, we can see on this one, our profit is definitely not as high because the actual price of the stock is quite a bit lower. You can see it's $58 compared to the 300 or 295. So this here I would probably do, if we hit continue, we can put in how many we would want to do. So we're sitting at 4,000. I got about 20,000 in here, so I would do about 5 of these to use all of my capital. And we're looking at around the same, a little bit less than what we would make on the Tesla put option there, but it looks like about 1450. So after about a month, you get 1450. You basically rinse and repeat that until you have more capital, and then just once you get more capital, then you can put in more orders and of course get more money coming back. This is a super safe strategy, not just because of the fact that you're selling the puts, but even if you do lose and this stock goes the opposite direction, you end up, what ends up happening is you just end up owning the stock at that break-even price. So you end up owning 100 shares at the break-even price. So you won't only want to do this on stocks that you are confident are going to continue to go up. Since this is an AI stock, it's going to continue to go up over the next few years. So if you do end up getting assigned the stock, you can either hold it or you can do that covered call that covered call strategy, basically where you're doing the opposite. You're selling calls and collecting the premium on those calls. On those, you would just come up here. You would go way out of the money. So you would do something like this here, add this here, and you'd make 275, and you'd basically repeat that process. Eventually, this will expire, and the stocks will sell, but you can continue to collect the premium. As the stock is going back up, of course, you're making money on the stock going back up as well. So it's kind of a win-win. This strategy it's hard to lose, I'm finding out. So as long as you do it right. So that's what my channel's kind of pivot towards, just because it's safer. I don't have to watch it constantly. And over the last month, I've made some money. Just over, you can see where I kind of started this strategy. I started it right in this area. It's been 17 days or so, 18 days, and I'm up almost $1,000 in 18 days. So I still have another about $1,000 to make off of my current positions. This CoreWeave position, HIMS, and Oklo. As long as Oklo moves the way we need it to go. So it got over 56 again. So I have this one set to the 56 strike price. So that one should expire fully in the money, and I should be able to get the full premium on that if it does expire at 56. Then I have HIMS at 41. I got that one right at the bottom of HIMS when it took a big dive. The key is to catch these when they take a big dive, like in 1 day or 2 days or over a week, and then starts to go back up, or you can see it starting to consolidate or starting to trend back upward. That's the perfect time to go in. So the last stock I'm recommending is this CoreWeave stock. It did peak. Let me go back. This is my actual position here. This is weird because it's actually the reverse. So this going down is actually reverse of what I'm making here. So it's a little confusing when you first start doing the strategy. But yeah, if you look at CoreWeave, it hit its peak at 182. But this stock is tied in with NVIDIA. They just released that they've bought a ton of their new video cards, not video cards, but data center cards for their AI stuff. So basically all their money's wrapped up in the cards, but or in the chips. And but this is my third one, and this one's the one I'm going to be messing with mostly. This one has the premiums you get on this. It's kind of crazy. If you go to the puts here, go to 32 days out, and then if you go to like this one here, you can see that the profit is 3,000, which is more than what Tesla was, but you can see that the capital needed is only 13,000. So I could actually do two of these. If I do two of these, we're sitting at about this same amount of capital that we're risking that we would be for Tesla. But Tesla was only making about 2,000. On this one, I'm making almost 6,000. If this expires above this level here. With this one, just because it hasn't taken a dive recently, I would probably go down to the 70%. But even that, let me go out here. 70%. This stock would have to go all the way down to $123 in order to break even. In order to be out of the money and end up getting the shares, you would buy the shares at $120, and it's currently $160. This CoreWeave stock is like, it's money right now. It prints money, and even if it doesn't, this stock's going to be around for a while because they're tied into the data centers and stuff that are being built for AI. So this thing's going to either be around for a while or Nvidia's going to buy it. I'm not too sure, but this stock's going to be around for a while. So if you got this stock at $120, you could just hold on to it, and it's going to go back up eventually. That's the market cap on it is. It's still got tons of room to grow. I think it's I saw it earlier. It's like 11 billion, I want to say, but yeah, this thing has room to grow still. So even if you get assigned the stock, this will probably be my next big play. I'll probably wrap all my capital up into this, but I still have to wait for the other one to expire, which is on the 25th. But making $3,000 in a month on 26,000 capital. I mean that's pretty good. That's over 10% in a month. So I'm happy with that. So that's my strategy going forward. I'm going to release these once a week if I come across any other stocks. Again, these are just going to be hypotheticals until I have capital. And then once my capital is available, I will make an actual trade. But that's it for now. If you have any questions, comments, any recommendations, definitely leave them in the comment field. I do want to make this full time, so definitely appreciate all the support. And I will see you guys on the next one. Thanks for watching. Bye-bye.